Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, October 28th, 2019. What we'll do in this video is take a quick look at some of the potential market moving events this week. We have some big earnings reports coming up pretty much starting on tomorrow, on Tuesday. I'll go over those real quick, and then a couple things on the economic calendar to watch out for. And then finally, we'll do a quick overview on the stock market, and then just really a handful of the same sectors that I'm focusing on and trading right now, and that's the cannabis stocks, Bitcoin, natural gas, coffee. We'll look at crude oil as well. There's an update to be made there. All right, so starting out with earnings, remember if you're on, whether you're logged into the site or not, click on resources up here on the top menu, and it'll bring you into the right side of the chart. Support center down here, tools of the trade. You have your earnings calendar and economic calendar. We're still kind of coming off the peak of earnings season here. We have Apple and some other big ones this week. I'll go over those in a second, so make sure to check that. Click that link, and then the economic calendar as well. You always kind of want to keep an eye on any big potential market moving events, especially when you're swing trading. All right, so this week, let me just go through this list. I've written down on my watch list here. Some to watch out for tomorrow, Tuesday, tomorrow, after the market closes. We have BYND, Beyond Meat. Now that trade, it fell through the gap, so it didn't look attractive anymore. Here, let me go over the chart. But it's been beat down pretty bad, so it could pop. BYND, again, this one was potential play on the gap, on the top of the gap or the bottom, and it went through the bottom of the gap, and it's below that now, but you are extremely oversold. And again, earnings is going to make this thing go one way or the other. I just want to kind of point out a heads up. There's a trend line on the 60-minute chart to watch. So if you're in that one or considering it, just be aware they report tomorrow after the market closes. The other big one is Alphabet, one of the big FANG stocks, one of the largest companies in the world, certainly has the potential to move the markets. A lot like the stock market itself, it's flirting with its previous all-time highs right here. You can see potential to either put in a triple top if it fails and starts to move lower, even if that means a brief pop. We're a little bit above that level there, or it may break out. Indicators tell me, just like the stock market, I believe the upside is limited. This chart should add right here. What you have is you currently have divergence. It's what I call unconfirmed divergence, only potential, because the indicators are still pointing up. PPO down here, that's a momentum indicator, as is the RSI. So they're telling you right now that the momentum is to the upside. So again, divergence is not a sell signal, merely an indication of a likely trend reversal. So as long as that divergence is intact, or at least potential, I favor any breakout to the upside, just like the stock market, being a marginal new breakout, meaning anywhere from 1, 2, 3, 4, 5%, no more than that probably, in a reversal there. So that's what you want to watch for Alphabet. And again, one of the market leading FANG stocks, so the potential to move the market. There's a possible uptrend line there. It's not super well defined, but I'll go ahead and I'll add it right here. Keep an eye on that one. And again, we'll see what happens after they report tomorrow after the market closes. So we really won't have an idea until Wednesday's trading. How we'll keep an eye on that one. The other ones to watch, if you're in the healthcare stocks, my focus has been on the generics and specialty stocks that are outperforming the healthcare sector as a whole. But XLV is your healthcare sector ETF. This is going to have your big stocks, big pharma in there, and I just want to point out that Wednesday before the market opens, we have Merck, MRK. Merck is right now holding support here about 80.23. It put in a divergent high recently, a series of divergent highs. It's been correcting. It broke down below here, impulsive breakdown, but it's been holding this 80.23 like a champ, as well as that, see the red line here, the 200-day moving average. So I put this one in a precarious technical posture right now because we broke down after the divergent high, and so with Merck, I'll give you my opinion on where stock goes. It's always a crapshoot when you have earnings, but to me this is a bearish chart, and so I haven't updated this weekly in a long time. I'm doing that right now for you. But you can see here, big divergent high on the weekly as well. So if I had to lay a bet on it, I don't think it's worth it. It's a bit of a gamble. I would say, to the downside. And here's a trend line on the weekly chart. It needs to break, really. And you can see that red line here. That's the 40-week moving average, and that's the same on this weekly chart as the 200-day. So you can see when the stock is below it, the trend is bearish. Once it breaks above it, that at level axis support, 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 support. You know, a couple whipsaws there through finally a break, and it didn't just limp on through there. Boom, big red down candle. Tried to get back, a little momentum fueled overshoot, failed, stayed below it, I should say. So again, it doesn't do a perfect job, but it does a pretty darn good job, and it tells you the trend. So you can see since then the trend is up. So if you break that 40-week on a solid weekly closing candle, as long as this, as well as this trend line, that'd be a sell signal. Otherwise, Merck has some room to push on up, just like the market, and continue a little higher. But again, this chart is telling me, warning me that the upside in Merck is probably limited at this point. Pfizer, PFE, and again, these are big pharma here, so they're gonna, they could determine where the healthcare sector as a whole goes. Pfizer, a little bit different. Pfizer, you can see on this daily chart, has pretty decent support around 34, 37. You can see it back here. Numerous saves right there. Numerous saves here, and another one recently. Resistance just overhead. So it's kind of stuck. It's pushing up against that resistance. I don't have a strong opinion on this one. And I look at the weekly chart, and I can say that it broke this trend line, and it's below it now. So that puts it in a precarious technical posture. This was the previous uptrend line on the weekly chart. You broke down, came in, made a back test, and then went down again. So right now, you have a similar technical posture. Pulse breakdown there, back test. We're still below the trend line. Maybe it wants to continue to back test, or it could roll over. So we'll watch these two, and then get an idea of where the healthcare sector might be headed. HCA is another one that also reports Wednesday before the market opens. If I didn't make mention, both Merck and Pfizer Wednesday before the market opens. This is HCA. I don't have this chart marked up, nor do I have a very strong opinion. I just want to make mention that we might see some movement in the healthcare sector this week. Wednesday, after the market closes, AMD, one of the big semiconductors. You can see AMD, a lot like the market and many sectors out there, is kind of pushing up on its, highs, and we're, like everything else, we're going back a year or more where a lot of stocks or indexes have pretty much hit a ceiling, and for the most part we're right at that level. We popped new highs on the S&P 500 today by such a slight margin. We're effectively at those previous highs. So there's AMD, and level to watch. An upside break would be bullish. Here's a trend line. We can extend that trend line. It's back testing now. Any new high will just extend the divergences unless it's much higher, and the stock could power through the divergences, but as of now, they'd be intact right there. Very overbought. And let's take a look at the weekly chart. Yeah, weekly chart, this one already broke down. I have two trend lines here, and it's back testing the ladder. So if I had to guess, despite what happens the day of earnings, and immediately after, I'd say the next trend on this one's probably down, based on looking at this chart. Amgen also reports. That's a big biotech, so that might move the healthcare sector a little bit, but I don't have a big opinion on that one. And then finally, Thursday, after the market closes, the almighty Apple. So let's see what happens with Apple. The chart really doesn't look bad. It burned through the divergences that it had on here on the daily chart. And I'll tell you, the stock is very overbought right now. Doesn't mean it must go down. You can see back here where the crosshairs are. We were just as overbought. We had a little correction. The stock powered on, became as overbought again. Here, I'll show you the line right here. Go down to this RSI and put a line right about here. And that shows you the extreme overbought conditions. This is 2 years we're looking at here on this chart. And you can see it's all about putting the odds in your favor. When we got to that point, the stock did correct. It went higher, but slightly. That's a marginal new high, barely, couple 1-2%. I didn't even measure it there. It doesn't matter. It's only a couple percentage points at most. Again, got there at that extreme overbought level, had a correction, did push on to a substantial new high, but not much. If I take away the lines, measure it out for you from that extreme overbought reading. It rallied for a period of about it says 1.3 months and 9%. So there was 9% upside, but again, I look at everything from a risk-reward profile, and that's just not when you see that most of the time you corrected or went up slightly more and then had a much larger correction. It's just not worth it, when we're at this extreme overbought reading. So again, not a screamingly bearish chart. It's a healthy chart, powering through those divergences. But longer term, here's a trend line that I have, comes off the lows right here back in early 2009. And you can see that trend line is currently being back tested, the blue trend line. And so that is potentially bearish. We'll just have to watch for rejection. So we'll keep an eye on this one for sure. Facebook, the F and FANG, F-A-A-M-G, the acronym that I like to use, encompasses those top 5. One of, like Amazon has one of the most bullish looking charts of the 5 FANG stocks, because you had bullish divergence, positive divergence here recently at the lows on the daily chart. We broke out, we back tested. So again, of the FANGs, this one's my favorite at this time, but I'm not going to take a position. I'll wait and see what they, earnings can certainly override the charts. But just based on this one alone, I think if the market holds up, I think Facebook, just like Amazon, I pointed that out recently, even though it got knocked down on earnings, it's still very much kept the divergences intact. In fact, it came in and had that earnings spike down through that bullish falling wedge, but it's back above it now. So the technical posture looks similar here on the daily chart on Amazon as it does on Facebook, but we'll watch that one. And then one of interest, I know there's a lot of buzz on this one in the trading room, quite a bit. I've shared my opinion on this one. Starbucks, you had a trend line break here, stock corrected, and then broke this secondary or more significant trend line that's been stair-stepping lower. I still think Starbucks is headed down here to at least my first target around 75, and possibly that second target there. But again, they're going to report on Thursday after the market closes, along with Apple and Facebook. There's a weekly trend line break, so another one to watch. And as far as the stock market goes, we have that now we have that marginal new high in the S&P 500. This goes back 2 years. What I've highlighted multiple times is this pattern of marginal new highs. This high, and I'm talking separate. Not when if you go up today as a new high, you're going to go up tomorrow. That's if you close up or even take out, I should say, today's highs tomorrow. That's a new high as well. I'm talking separation by a period of at least several weeks to several months. So this one was again just all of these were less than 3% above the previous one, and that was a marginal new high. Followed by what I'm showing you is correction, new high, correction, new all-time high, correction. This again was a new all-time high, correction, and now we have separation, new all-time high. So will the pattern repeat? I don't see any reason why it wouldn't. Nothing's guaranteed, but as of now, the technicals point that way, because each of the recent divergent highs were, as you can see, we had the negative divergence on those new highs, and that's what we have here. So we'll see how much more upside. I think it's still minimal, within a few percentage points. So we'll see if the pattern repeats. Here's what it looks like on the 60-minute chart, and you can see, so there's a breakout today to new highs. And as I said last week, when you get this close, especially as close as we were on Friday, chances are you're going to punch up through there. So that's what we had today. And now we'll see. The big thing is, can the market hold and build on these gains, or will it prove to be, whether it's tomorrow or next week or 3 weeks from now? Because I think that's about the longest. When I went back, measured it before, where you broke to new highs, after it's been several months, I think it was not much more than a few weeks until that breakout failed. So that's that, and like I said, no sell signals yet, but we'll watch. We can add some trend lines. The trend lines get a little sloppy here, but like I said, we'll just keep an eye on, see if we can get any sell signals, but no reason to fight it right now. We do have negative divergence. Here's QQQ, extremely overbought on the RSI. Still a little bit of divergence here on the PPO, and here's what it looks like. There's your new high, new all-time high in QQQ, and you can see there's that divergence line. Just all it does is simply extend the previous divergence, and not a sell signal. but we'll be on the lookout for one that could come in the shape of several things. Maybe trend line, support break, big red candle back down below the recent highs, or the breakout level. Bearish candlestick reversal pattern. We'll see. But right now, let's go on to where we can, where the risk return profile is a lot better. The good thing about the stock market is you don't have to trade the market. There's many other things out there. So that brings us into cannabis stocks. MJ, continues to work its way higher after breaking out of this trend line. Still an official trade. Here's a minor, 60-minute uptrend line. It's been walking up, getting closer. Not there yet to the first target, but still looks fine right now. And of course, we have ACB is another one of our trade ideas on the cannabis stocks. That one's about flat today. It was up a little earlier, but still looks good. TLRY, Tilray already hit the first target. Still looks good here on the daily chart. Almost hit the third target, came very close, pulled back, and it's been consolidating right on that first target level. Remember, resistance once broken becomes support, and you can see that here. Look at that beautiful price action dancing right on that 23.62 level. And when I say beautiful price action, remember, it's not healthy for security to go up without a correction, pull back along the way. Whether you're in an uptrend or a downtrend, you're always going to have little counter trend rallies. And this one was the strongest of the big pot stocks lately. Had quite a run off the bottom right here. Just last was that October, about the 11th or so. This guy ran about roughly 25% or so. So it's taking a little breather. And of course, don't get married to it. Doesn't mean it can't, correct. Doesn't mean the end of the run's not over. I just don't see enough in the charts to say that it is. All right, Bitcoin, GBTC. It's effectively hit our target today. I have this trend line here. Remember, I revised this trend line, so that was effectively hit today. Up to you whether you want to book profits or not. It may still work its way up here to that level, but here's the thing. This level right here, that line's at 11.95. You can see it pop up there. I set my target a little bit below that, about 12 cents below. However, as I always say, this is what we call it's a closed-end fund, Bitcoin Trust. So what happens is it's like an ETF, but it's not pegged to the value of the underlying index, or in this case security, which is Bitcoin. It tracks Bitcoin, holds Bitcoin, but it'll trade at a premium or a discount to the actual price. What does that mean? Well, Bitcoin rallies like 50%. This thing could rally 60, 65, or it could rally 40. It can underperform. It depends if more people are buying, you have more buyers selling it that can push the price higher. And at the end of the day, it's tracking Bitcoin. I'm not sure whether they use futures or what, but I use the futures to really keep an eye. Futures are going to track the price of Bitcoin more accurately, and that's BRR. So as I posted this morning, BRR gapped up on what may prove to be a momentum-fueled overshoot above the trend line here, as well as at 95.22, and that's that comparable level right here I was showing you on GBTC, where I'd set my second target. So Bitcoin futures got ahead of themselves, or at least have played out well, hit that target. That was the upside bounce target, as well as this trend line. And so we gapped above it. We came back in. We're just right around that level now, and still above the trend line. So we could hold that support. If we don't, and I'm kind of leaning this way, we come back in and we can make a backfill of that gap. That gap is at about 89.23. Remember, on these futures charts, they will roll. These are the December contracts now. When I originally posted this, or the charts from a couple months ago were the, what was it, August? September? I can't remember now. So back to GBTC. Up to you. There's one way to do this is we have nice gains so far. I forget where exactly we entered this one. It was in the wedge before it even broke out. 880, I believe, was the price. So yeah, right there, 880. I just had it. Click on it. Close enough, right about here. And so it's good for so far about a 25% gain. So what you can do is either take profits. You had an opportunity this morning and earlier today. Still, you're close to that trend line now. or raise your stops. Now if you're going to raise stops, a logical pullback would be to backfill this gap right here. It's up to you. You can set tight stops. You can set a stop a little bit below the gap. You can set stops wherever you want it. But at this point, I would raise it above entry. I would not risk giving back, 25% profit. Now, if it can break out of this trend line again, and BRR holds above that trend line, then it may run up here to that next target there. About, the targets that I set at 1183. The actual resistance is at 1195. But like I said, keep an eye on the futures contracts because that'll determine where this thing goes. All right, nat gas. We'll start with the futures and then look at UNG or UGAZ. And let me find my chart. Got a lot of charts here. Here we go. This one. All right, so if you remember in Friday's video, did during the market open, we had this triangle pattern forming here. And so what happened is, futures shut down over the weekend, and when they opened back up last night, boom, gapped up and above there, breakout, and rallied right up to just shy of that 2598 target. It's always a good idea, like I say, if you're targeting that, if you want to game a pullback, you take profits just below the actual resistance level. But I still think this opens a door for a move up here to about that 2.7-ish level. And again, nothing so far, but pretty bullish price action. We had that smackdown right there. Oh no, it was right here from the NOAA forecast. But so far, if you look at it this way, we had an early uptrend, a pretty nice, more aggressive uptrend, pretty steep right here with a series of lower lows and higher or higher lows and higher highs. But we still have at this point in time an uptrend off this low. Remember, this was the bigger picture here, or the bigger picture was back on the daily chart. I showed you back here. We had a breakout of a big bullish falling wedge with divergence on the daily time frame. This is a 60-minute chart we're looking at here. And this was the first leg up after that breakout. And so I viewed this as a corrective wave, and that's set up in this bullish falling wedge pattern, positive divergence, everything you like to see, breakout, and so far, we're moving up. We have a series of higher lows now, and as of today, higher highs. So this is our new uptrend right now. And so again, as of now, it looks good. When might not it look good? If you're wondering where to take profits, well, here's a trend line now to watch. You could certainly set a stop somewhere below there. And for you guys that trade, guys and gals that trade UGAS, or there's other ETNs out there. UNG is not leveraged, but I know on the site this seems to be a crowd favorite right here. UGAZ, and that's it. We hit that level. That was the first target way back here. Following this breakout, this divergent low and all that, 1465. We hit it again, and I expect, we're having a reaction so far, a little consolidation around there, but I suspect we'll go on through there and move on up to at least this 1563 target and quite possibly above that. And again, I'm viewing this as potentially a new leg up in a much larger downtrend based on that daily time frame. And if so, I'm talking about taking out the previous highs. So trade this as you want. But what you might consider is, if you're in it for the long run, periodically raise your stops there along the way. And crude oil, if you recall in was it Friday's video, I mentioned we had resistance here at I believe it was Friday's video, 56.88, and showed you that we were starting to diverge, and that another thrust up there, if we hit that level, which will look likely, we'd do so, we'd have a small divergent high on the 60-minute chart. So we've hit it twice, rejected so far, a little pullback, nothing much as of now. And remember, bigger picture, crude is I'm not adding this as an official trade or anything now. I'll give you updates. Bigger picture, when we go to the daily chart here, you can see on USO is kind of a big, sloppy, mostly sideways trading range now for months. This is a clear trend right here, tradable pattern, had a clear sell signal there on the breakdown, set that up. But since then, we've been moving sideways in this range right here, and within the range there are ups and downs, but the MO when you're in a trading range is ideally you buy pullbacks to the bottom of the range, that's support, and then sell rips to the top and or short. And so right now we're kind of in no man's land, smack in the middle of the range, and therefore the near-term direction is not as clear to me on crude oil. And finally, coffee. That's one I keep highlighting recently, looking better and better every day. Here's that downtrend line, bullish falling wedge pattern, which broke out recently. There's your downtrend line. There's the breakout. There's your divergent low right there, positive divergence. And so far, so good on coffee. Coffee futures are KC. And KC continues, you can see, kind of stair-stepping its way up here. That's it right there. Broke out. We had a divergent low, and we've been moving up like this in this uptrend right here. Potential divergence, but KC will, if when it wants to run, and so far, like I said, the daily chart looks looking pretty good. These divergences don't overly concern me. You go out confirmation bias if you want, but like I said, divergences in themselves are not buy or sell signals. Now, should it be confirmed? We get confirmed negative divergence, and look, we might right here. I have my next targets there about 101, and we're getting close to that level. So if we reverse off there, that may put that divergence, confirm it with a bearish crossover on the PPO. However, how far down it takes us, like I said, it might just be a pullback, maybe take profits, but on this one, if you're trend trading, looking for maybe a much larger leg up, you may want to just ride out any pullbacks and set your stops appropriately. I can say this at this point in time. Ideally, KC should remain above this 95-60ish level. We had that sort of a W bottom back here, and we broke out of that, and that was, here's your basing pattern right there. Looks like this, kind of almost a W pattern there. Breakout, we back tested it, so this is ideally where coffee should remain above on any pullback. Anything below that will probably just take out those previous lows. And I know that's a pretty wide range. You could obviously set a stop much tighter if you're in it, but as of now, looking good. And we'll wrap this up with gold. So far, gold's holding in there where it should. Now, obviously down today pretty good. Why? Well, because the markets broke out the new highs, and again, that should have been no surprise with the way they were pushing up there last week. The Qs breaking out the new highs. SPY joined suit today. So here you have this little bear flag type action, and we're still above. I threw out gold as an unofficial trade idea today, and I maintain it. Because you have this, you had a downtrend line there. I pointed it out here on a pullback to this blue trend line, and we're a little bit below that now, but we're at triple support. We have the big 1492 level, remember that one. We have the uptrend line right here off the lows that form that triangle, and then we have the downtrend line that originally formed that smaller triangle pattern. So there's a confluence of support right there, and so I mentioned gold as a potential long with a stop not too far below. Now this would also be a play on a failure of the breakout in the stock market. It doesn't have to happen that way, but should the stock market reverse soon, sometime this week, maybe next week, and fail and impulsively move back down above the recent highs that we just took out, then we could see a rally, a flight to safety rally in gold if it holds that level. If not, if the stock market keeps going, gold's probably going to break down. So again, it's kind of a speculative play, betting on the breakout in the stock market to fail. Otherwise, if we keep going, like I said, we may stop out there. And then on that too, which confirms the a long entry in gold, is the fact euro is still holding that trend line support. This is E7 euro futures, and remember we had a breakout recently of this downtrend line right here. Breakout back test, we were moving higher. We hit a resistance level here, a price target where a reaction was likely, and that has been the case. And so far, we've pulled back to trendline support. So I listed it, posted it here recently for those that took profit to scale back in between that 111.47 level and the trend line, but not far below. You really ideally want to see it stay above the trend line. So stop a little bit below that. Now, if it breaks that, it doesn't mean that the rally in the euro is over or the correction in the dollar. Right now we're putting in, as you can see, the trend line is nice and clean. There's a series of lower highs, or higher lows, I should say, and here's our higher highs. We're in an uptrend, and we could certainly go down here and reverse and still stay in an uptrend. It just wouldn't be as steep there. So there's plenty of room for euro to fall and still keep this breakout intact here. So like right now, like I said, objective to add there, and should that happen, then that would be a net bullish thing for gold. It doesn't mean gold will rally, but if the euro rallies from here, holds that support, and takes out that previous highs, that's going to mean the dollar is falling. Remember, the euro is essentially an inverse bet on the dollar. And here's the dollar index. The dollar broke down. These are dollar index futures and have been stair-stepping lower since. All right, let's wrap it up here. And just FYI, may or may not get an end-of-day video out. I have a 3:30 doctor's appointment today, and usually I try to schedule those in the morning. I had to reschedule because I was sick a week ago. The afternoon appointments can get really backed up, so I don't know what time I'll be back from that. So if I don't get a video out today, I really don't expect a whole lot going on. Markets broke out the new highs today. That's the current trend. No reason to fight that. You know, if you're short and if you're long, you want to try to play the momentum, sure, you can just trail stops up, let it run. But I'd rather sit back and wait and look for some type of sell signal in the markets, and then look to position short rather than to chase this breakout at this point in time. As far as long side, I'll just play those alternative assets and stocks that don't have a high correlation to the broad market. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.